Welcome to Peak Oil News for June 10th, 2022. According to the National Oceanic Atmospheric Administration, 36 gigatons of carbon were released into the atmosphere in 2021, the highest ever on record. And this was with much of the world in lockdown, ostensibly because of the COVID-19 outbreaks. This also comes as there is general consensus that oil production and consumption was lower in 2021 than it was in 2019. So, if we are using less oil, why the greater increase in carbon emissions? Because as oil inventories enter depletion, the world will most certainly turn to other sources of power, and the most abundant energy source is coal. This is happening particularly in India and China already, who burned over 700 million more tons of coal year over year. This means that by the end of next year, China will be producing 4.4 billion tons of coal a year, and India about 1.2 billion tons. Also, the Newcastle benchmark price for coal has doubled, and while the United States has smaller coal growth than the two aforementioned countries, it still saw a 17% increase in coal use last year. While electrification of the U.S. grid and transportation sector is a number one priority for many climate activists, they may want to remember that increased electrification will almost also mean more demand for coal, as coal has consistently been involved in producing 35% of the growing electricity consumption since the 1980s. And coal, used in electricity generation, typically emits between 25 to 50% more CO2 than other fossil fuels. One should wonder at least if electrification of transportation will really lead to lower CO2. And in our second story, it looks like your fuel is going to have more biofuel in it, like it or not. This is part of the EPA's agenda to reset and re-strengthen the renewable fuel standard. Corn ethanol mandates for U.S. refineries will rise to their highest level ever, 15.25 billion gallons this year. Backers of this move stated that it will benefit consumers to have more ethanol in the gasoline supply. Corn growers and ethanol makers also applauded the EPA announcement. At long last, the RFS is being put back on track, said Jeff Cooper, chief executive of the Renewable Fuels Association. However, the American Petroleum Institute was not happy with the decision, stating the standard was too high. The final 2022 volumes exceed EPA's own estimates of what the market can absorb and are likely to place additional pressures on refineries that are already running at full throttle to keep pace with demand. But consumers can take a deep breath, knowing that this decision will add upward pressure on food prices as corn is turned into fuel, not food. And you might as well go buy some gas additives to help protect your engine and fuel pump from increased corrosion, a common problem with fuels laden with ethanol. Our third story, inflation at an all-time high. And welcome to the world of 8.6% inflation, according to the U.S. Bureau of Labor and Statistics. That was the rate for last month. This is the largest print of inflation since 1981. I would also note that this is an official number, which has had its matrix manipulated more times than Neo has killed Smith. According to the site Shadow Stats, the number is closer to 16.8% if you use the original matrix to gauge inflation, which would put it at the highest level since World War II. Transportation fuels are leading the inflation charge, with gas hitting a national average of $5 a gallon nationwide just yesterday. That is $2 above the average this time last year, an inflation rate well over 60%. The official print published today was higher than expected and portends to more monetary tightening by the Federal Reserve, one of the reasons why markets crashed over 800 points. And an interesting story of energy intrigue. The Biden administration drops tariffs of solar panels coming from Southeast Asia. This story has a few twists and turns, so please stay with me. It starts in 2011 when the Obama administration accused China of dumping solar panels on the U.S. market at such low prices domestic producers could not compete. Following the accusation, the administration placed a 250% tariff on Chinese solar panels. However, in March, the Commerce Department launched an investigation into the industry after complaints were filed by a small U.S. producer, charging that solar production companies in Southeast Asia had large amounts of Chinese components and were skirting the tariffs through wrongly certifying the country of origin of the panels. This has spooked U.S. solar companies, particularly those that were in the middle of project development, as a sudden change in tariff structure could triple the cost of incoming solar panels, or worse, they feared having to pay retroactive tariffs on panels that they had bought in the past, if it was determined that the country of origin certification had been manipulated. In order to calm the industry and to keep the development of U.S. solar projects moving forward, the Biden administration has issued a temporary waiver on solar panels of questionable origin. A document released by the White House said, failing to take these actions would deny consumers access to cost-cutting clean energy options, add risk to our power grid, and stall domestic clean energy construction projects that are critical to tackling the climate crisis. Many were disappointed with this decision. Samantha Sloan, Vice President of First Solar, one of the largest U.S. manufacturers of solar panels, stated, "First Solar is deeply disappointed in today's announcement, which only benefits China's state-subsidized solar industry." All right, that's it for today, folks. Thanks for watching. See you soon.